Hello everybody, and thank you so much for joining us in today's video of DIY investing. Today's video is going to be a little bit different. We're going to be doing an interview and breaking down some of the projects that are going to be releasing upon Pulsechain. You guys already know that I'm really bullish. I sacrificed over a year ago, and I'm looking forward to seeing some of these new projects that are going to be developing and building under the ecosystem. So what we're going to be talking about today is going to be Phamous and Phiat. These are part of the same company, and so they're going to be working and building some of these new infrastructure and technology that's going to be put onto Pulsechain. And so this is Dylan, this is Buck. Dylan, you can go ahead and kind of give us a rundown, explain what you guys are working on, and then we can kind of go from there.
Sure, yeah. Dylan Hexastani. I've been in the community since the beginnings. I've been a follower of Richard Hart for pretty much all of 2018, and then found he was making Hex, so thought that was extremely interesting, and got involved with that early on. Decided to become an admin for Richard across his Telegram channels a couple years ago, and have been doing that a hobby-like basis, not getting paid for any of that stuff, just enjoying working with the community, helping out any way that I can, and things like that. And then, now we're helping out the Phiat and Phamous team make their stuff, cool stuff we got going on, fork of Aave and fork of GMX. So
right. So my community already knows a little bit about GMX because I've been talking about Arbitrum lately. And so what Phamous is a fork of GMX, and then what Phiat is a fork of Aave. So if you guys have ever used Aave or GMX, that's basically what we're going to be talking about. These are going to be forks that are built onto Pulsechain.
Precisely.
Sweet. So if you want to go through and kind of give us a rundown, you can show us some of this stuff of your platform and kind of what you guys are building right now. I know it's just under the test net, so it'd be cool if you could kind of break some of that stuff down, how to use it, different sort of things that you guys are going to be building, and different things that are going to apply for the average user when you actually go live.
Sure, yeah. And while I get this set up, Buck can tell you a little bit about himself as well.
Yeah, hey, I'm Buck, and I'm one of the founders of Phiat and Phamous. We're investment professionals that have pretty strong computer science backgrounds. I also happen to be a Hex OG like Dylan, and so I've been around. These are two protocols that I really enjoy and basically wanted to have available for Pulsechain and all our tokens. I find them pretty useful because they allow you to do kind of critical risk management, being able to lever, being able to hedge, being able to short in different ways, which you need to do in order to manage a portfolio properly. We haven't had the ability to do this ever with Hex and a lot of these coins. And so basically I just wanted to solve that problem.
So who are all of the developers that are actually building these two?
Yeah, so it's not me, but as I said, I work in the investment industry, which is very computer science heavy. People that I have spent the better half of a decade working with are building these as my partners.
This is Phiat. This is the fork of Aave that we have for targeting the Pulsechain ecosystem and the RH economy, I guess you could say, right? It's essentially a fork of Aave. It will have a range of different assets that you can deposit. There's three ways you can play this game. You can be a depositor and simply deposit funds. Say, for example, you're a Hex whale, or have a bunch of Hex, and you do not want to divest from your position, but rather perhaps deposit it on something like this and borrow a stable coin to do some business IRL, right? You can totally deposit your Hex, take out a loan against that Hex and do your thing and pay it back at your leisure. There's another way you can play this game. You can be a staker of the Phiat token, right? And you can earn a share of the revenue generated between the borrowers and lenders. As you can see, there's a deposit APY that a depositor will be paid from the borrower, and then you have what the borrower is paying for their loans. And these are based off of use of the platform. So, as more of the pool is being used, your loans will become more expensive and things like this. And then the spread, the net interest margin, is paid to the stakers of the Phiat token. Right. So, while you're staking this this token, you get a range of these different assets depending on the use of the protocol, right? So as you can see, Hex on testnet is a borrower is being charged a 15% interest rate for their loans as long as they hold it open, right? And then you have something like Pulse that's only generating a 1.57% fee for that for those loans and stuff like this. So it ranges depending on how much of the asset is being deposited and then the actual loans that you're taking out on these assets and stuff like this. On this third version of Phiat, we have introduced some risk parameter measures to these low liquidity assets, right? Because I mean, you can't really have these things have tons of liquidity, because we know that there's billions of dollars of hex out there on the market, right? So if you allow just any gigantic whale to deposit on these without any restrictions, it could cause a lot of problems, right? Because there's not enough liquidity to liquidate that sort of position. So we've added some sort of risk measures to hinder that from happening, like deposit caps and things like this. But the goal with these things, by having everything on chain and no admin keys, everything is very transparent and extremely useful, right? Aave has been around since 2017, so the code is pretty ironclad as it is, and then they don't have any access to users' funds or anything like that. Same with us. All we are able to do is kind of move the levers around and affect the amount that you can deposit and things like this, but never any access to these sort of funds and things like this.
Is the risk metric that you guys have kind of implemented, is that going to adjust automatically, or is that something you guys have to go in and adjust as the liquidity changes, as there's more buyers and sellers that enter the market?
Yeah, I'll jump in there. Yeah, that's something that we control. We have a pretty strong risk management background, right? This is something that we do every day. I think we're the right people to govern that. Because it's not something that you want to have a community voting on or something like that. You want professionals that understand volatility, looking after it. And so we've spent a lot of time actually improving Aave just to make sure that this thing is as conservative as possible. It's kind of boring stuff. I know everybody's in crypto for gains, and they don't care about things being properly managed so much. But when you're going to have a TVL, hopefully with hundreds of millions of dollars, maybe billions of dollars someday, you really want that to be secure and not have to worry about it. So we've spent really the last 6 months adding these features to it to make sure that it's as safe as possible.
So how do you guys already have quite a bit of community interest between the Hex and Pulsechain communities already? Because I know that Dylan said that he's been early into Hex, been working with Richard Hart for a long time. So at this point, you kind of assume that you guys already have a little bit of a community built up at this point.
Yeah, that's great. That's a great question. So we basically have the biggest OGs in the Hex community behind both of our projects. We raised the money we needed for this in 5 days. From a relatively small number of people. I think there were around 500 people who sacrificed for it, which kind of shows you we got basically the best guys involved in both of these projects. So I think that's important from a strategy perspective, because it means that we now have their buy-in and they're going to be supportive of us. Obviously, one of the big risks with any of these platforms is first mover advantage. Are you going to be the guy that everybody goes, okay, we're going to use your thing and not someone else's? Right. So I think it's going to be very hard at this stage for someone else to come in and compete against us.
When did you guys actually sacrifice? Was that around the same time that Pulsechain was doing their sacrifice?
Yeah, this was back in April.
Phiat was in April, and then the Phamous sacrifice is going on still, but it started in December. Okay. And we'll probably leave it open for probably another month or so.
Okay.
Uh, yep. But yeah, so the first sacrifice took about 5 days. At that stage, Pulsechain was supposed to be imminent. So we closed it and we were getting ready to launch. Um, and then obviously Pulsechain got delayed.
So are
So
you guys going to be waiting
so
to
then we ended
launch
up.
when Pulsechain goes live, or are you planning on maybe launching on a different chain in the meantime? Because I did hear some people were planning on doing that.
Yeah, so this one that you're looking at right now, Fiat, is going to launch on Ethereum,
Okay.
probably this quarter. I say probably because I can't say definitely, but I think pretty likely sometime in February or March, you will see this on Ethereum, and then the other one that Dylan will show us later. It were We may launch it on another chain at some point, but we're not promising that yet. It's possible though.
Okay. What about so with the other one, you guys said that the sacrifice is still going on. Can people still participate in that? And is that kind of at the last round of funding until you just kind of actually release that?
So yeah, that's right. So the reason we're doing the second sacrifice now for the other one, even though the other one is going to be on Pulsechain, is actually to help us raise TVL for Fiat on Ethereum. And I apologize that that's a little confusing. But if you sacrifice for Phamous, you'll also be getting a portion of the Fiat tokens on Ethereum, but not on Pulsechain. So that's still ongoing. You can still sacrifice. The information's on Phamous.io. And yeah, people are still sacrificing plenty of money every day to it. So it's definitely worth checking out.
Yeah, for sure. So if anybody watching this ends up wanting to sacrifice and you're interested in this, I'll link everything in the description so that you can find it there. Anything that you guys need will be linked inside of the description for following through with that stuff. So honestly, the next part, what do you guys believe is going to be the most value? Where is going to be the most value to be made? What are you guys most excited about when it comes time to launch? And then you guys can also just jump into the other one as well. Just feel free to kind of explain whatever you think is the most important. Everybody here that watches my channel obviously is here to make money. That's why everybody's here. Nobody really understands the tech side of things. And so anybody watching this, ultimately pay attention, because this is going to be really where the real funds are going to be made, where you're going to be able to generate the most profit.
Yeah, I think something exciting that we've never had before with Hex would be the ability to hedge your positions or even short the market, right?
Right.
And then also with shorting, you can also long things as well. There's going to be probably a real push by the community to have people put their money where their mouth is, and hey, I think Hex is going to zero, right? Well, okay, well, short it. Feel free, do your thing, short on spot, and see what happens. Do your best, right? That's one of the exciting things that will definitely be happening, I believe, on things like Fiat and Phamous. And other than that, when you have these large stakes that are, out for years, there's not really a way for you to de-risk or hedge your position to the downside, or if you're sitting on cash and you think it's the bottom, there's not really a way for you to hedge your position to the upside, right? In case the market starts to run away from you because you're sitting on cash, right? Well, these things are tools for you to be able to do things like this. So, speaking of that, we can, I guess, head over to Phamous, right? Because it's a lot easier to leverage or hedge your position with leverage, right? With Fiat, you'll have things like flash loans and the ability to have low leverage if you're smart enough to do things like that. But generally speaking, you're going to want to use the leverage for things like on Phamous, right?
I think they're both interesting protocols. They're both very successful protocols. Aave is better understood by whales and large users than kind of average retail users. It's an essential function to people that manage millions and millions of dollars, as opposed to the leverage trading thing, which is a little bit more obvious. But they both of them have their use cases. They're both effectively $1 billion protocols. And one thing that I think is interesting is the Hex community has never had access to these sort of things before. Right. And the Hex community hates centralized exchanges because it's been taught to by Richard Hart. So they're a DeFi native community that is used to using MetaMask, used to using DeFi, and I think we'll ultimately be pretty excited to use these sorts of things. Definitely. Yeah. And then basically the cool thing that we've done, the coolest thing that we've done really with the Aave fork is we've changed the tokenomics around so that basically as a token holder you benefit. And that's probably the most important thing. So this little window Dylan's showing you, basically it's like owning a bank, right? Every time somebody transacts, you make money, right? And banking's a very essential function in the world. There's a reason people tend to think of bankers as being rich. It's because they are, right? So if you guys like making money, owning a banking system is a pretty useful thing, and owning an exchange is going to be a pretty useful thing. So yeah, I'm pretty excited. The big risk I think for us is really just how successful will Pulsechain be, right? Which is a little bit out of our control, but I'd like to think that what we're doing makes it more useful.
For sure. So what are the, kind of break down the tokenomics a little bit real quick. What's the total supply and different things? Is there a total supply that you guys have already created at this point, or is it still kind of in the works?
Yeah, so the total supply of both Phiat and Phamous, or the Fame token, is 55,155,000. So there is no inflation with these coins. Okay. It's a fixed supply. It could, you could hypothesize and say, as time goes on, it'll only be deflationary, as just naturally people will, lose their tokens, or do something stupid with them and send them to wrong places. You know what I mean? Right. So, as you have these tokens, both Fame and Phiat, you stake it on these platforms respectively. You do get a share of the revenue, which you can claim at any time, as fees accrue to your heart's content. I mean, you could claim it every hour if you really wanted to, but it might not be efficient to do that fee wise.
So there's no inflation. Is all of that collected just through the fees that are happening on the transaction?
Pretty much. So everyone, for instance, on Phiat, every time somebody opens up a loan, they're paying an active rate for their assets, right? So, as we're talking, I'm owing more money. It's just constantly accruing. It never stops unless I pay off my loan. You know what I mean? So, and these variable interest rates, there are stable interest rates where it's a fixed, like a mortgage where it's a fixed rate. But I believe on testnet version right now, the only thing that you can do that on is a stable coin. So, but as more use of the pool is had, the APYs that the borrower and depositor being paid and is paying increases. And then obviously the stakers get a nice share of those fees as well, which I believe on Phiat, it is 30% of the revenue is given to the stakers, depending on how much of the token is staked, like a sliding scale, similar to Hex, I guess you could say. If less is staked, then a less amount of the fees is given to the stakers and more is given to the treasury. Whereas if all of the tokens are staked, then out of that 30% for Phiat, all of those fees generated gets paid to the stakers. So.
Yeah, perfect. Well, honestly, I think that answers about all my questions as far as Phiat goes. If you guys want to break down Phamous and kind of give some more explanation as to what that is, some cool features, and why it's ultimately going to be profitable. Basically, guys, like I stated, it is a fork of GMX, and so if you've been staking GMX like I have, it's been very profitable as far as that goes. So I am interested to hear kind of how the tokenomics differ, if they do differ at all, and kind of how the whole thing works.
The tokenomics for Phamous similar to GMX, although different. They're pretty straightforward. It's just like Fiat. You have a 60-40 split of the fees. 60% is given to the liquidity providers, and the liquidations are exclusively, given to the liquidity providers. The PHLP token is what we call it, where I think with GMX it's called the GLP,
Yeah.
if I'm not mistaken, right? And then the other 40% of the fees generated, goes to the stakers, and basically the same as Fiat, right? So, if only 1% of the token is staked, then a majority of the fees will be given to the treasury. If 100% of the token is staked, then all of the fees generated are given to the stakers, right? So,
Right. So all of the leverage trading is going to be done through Phamous then.
that's what we hope, right? I don't foresee having any sort of ability. Perhaps you could have a centralized entity being able to do these leverage trades, but I don't think they'll have anything like Hex or any of the tokens that we have on testnet or anything like that, right? So this will be the premier place, we think, for Pulsechain and the Pulsechain ecosystem. And we can't really list all of the assets that GMX has at the moment on this testnet because they aren't traded on the Pulsechain testnet at the moment. But hey, you'll probably see all of those same assets that are traded on GMX. You'll probably see them right here on Pulsechain testnet,
Right.
including the RH stuff, which is pretty cool.
So whenever the airdrop actually happens and people have these duplicates, one question a lot of people have speculated that the duplicated hex is going to have a secondary value that might perform well. Do you guys have any plans on being able to actually take some of those fork tokens and being able to trade them over here? Or is that really just to see what the market has to decide as far as their value goes and liquidity and things like that?
That's an interesting question. I think you'll probably see tokens that are traded with sufficient liquidity, right? And probably won't see the broken versions of other tokens. Like, for instance, I think after the fork, and then you have a copied link, forked version of link where it really doesn't work anymore on Pulsechain, because the entire use case of link is on Ethereum,
Right.
and all of their stuff runs on Ethereum, and it kind of just falls apart and breaks on Pulsechain. You probably just see the actual link ticker on something like this rather than the broken version on the Pulsechain. So, but things like Hex, where people will probably continue using the Pulsechain version of Hex, which could just end up being the real Hex at some point, perhaps. Or even Hedron or the Maximus stuff. It's a little nuanced, right? Because the tokens that are being forked over that are in our community, right, the RH ecosystem, will probably just continue using those normally on Pulsechain, right? And then they'll just have some sort of probably lesser value on the Ethereum side, perhaps. I would imagine.
Right.
So those things will probably do just fine. But the other, Pulse version of some of these coins probably, can't say for certain because it depends on what the market decides. So this is the famous dashboard, right? I'm sure you're familiar with GMX. It looks very similar to what GMX is, but on Phamous we have on the testnet version right now we have a 30x leverage cap, and then it's extremely easy to take out long positions and short positions. As if you wanted to use this platform, there's a couple of different ways you can play this game. You could be a liquidity provider and provide PHLP, with a variety of different assets and collect 60% of the fees, as well as liquidations, right? And at that point, if you are a liquidity provider, you're betting against the traders, right? And typically speaking, traders do lose most of the time. So, you could probably win that bet, right? But there is obviously the chance that the traders get it right, and you could end up with impermanent loss in some coins by having an abundant amount of one over the other, and the PHLP index gets out of whack. That's entirely possible, right? You could be a trader, and hedge your positions. You could degenerately gamble if you wanted to, right? That's entirely possible. Or you could be a staker, and you could bet on the performance of the protocol over the long haul, perhaps, and just collect the fees of the platform passively. That's entirely possible as well. So with that being said, I'm going to open up a 10x long on Hex. It works similarly to how GMX works. It's pretty straightforward. And another cool thing with this protocol, it is a price taker. It is not a price maker. And you're betting on the price of these assets, what we're pulling from. So there is an oracle or a fallback oracle that the devs will have in the meantime until there's a decentralized solution to this stuff. But when you are trading on this, it is a derivative, and you are betting on the price. So you're not affecting the spot price when you're using things like this or anything like that. There is upsides to using the liquidity of this stuff. Eventually, as of right now on testnet, I can't really show you how it's done because it's we don't have the PHLP on Phiat, but you're more than able, hopefully on mainnet when Pulse launches and we have Phiat and Phamous, you'll be able to use the PHLP as a collateral, and you'll be able to manipulate the spot markets with your liquidity deposits, right? Which is going to be very cool when it's enabled and stuff like that. But yeah, and just like that, I opened up a 10x long on Hex. Very cool.
This is going to bring a lot of value to really just the Hex ecosystem and just Richard Hart's ecosystem as a whole, because one of the questions people have had was, what the heck is going to ultimately drive the price of Hex as it's, sitting at this high valuation and market cap, and there's more liquidity than there ever has been. After the bear market, of course, but leverage is going to be one of those big things, in my opinion, that's ultimately going to see a lot more price appreciation, and it's what causes a lot of those tokens to ultimately see so much price appreciation. So inside of a bull market, you obviously have new buyers stepping in, and so if you could actually long these sort of things or short these markets, it's going to really bring a lot more volatility inside of the market. And also this just being decentralized, it adds that much more value because there's really not too many ways to do all of this stuff. Really, inside of the last couple of years, we've seen that stuff get built. And so it's definitely a proposition as to why we will see the price of Hex do a little bit better, assuming that ultimately there's liquidity enough to trade and we get more involvement inside of this stuff.
I would just say we probably won't increase volatility because what we're able to do basically is actually, because people are able to short things, we're going to actually see a real price. So people are going to be able to bet against the market. So we should actually dampen volatility net. But your point about liquidity is a good one. You can't be a proper investor in a market if you don't have tools like these. So the big boys can't even really invest in Hex currently, right? Because they can't get in and they can't get out, right? They eat too much slippage both ways, right? So having the ability to borrow against your position as a whale is very important, right? And that allows somebody else to get in, right? While you're trying to de-risk, so you can deposit. You can get stable coins. Someone else can, deposit stable coins and get exposure to something else, right, through Phiat. And then Phamous basically allows you to, you can basically take a long before you start buying spot, right, and reduce your slippage costs. So, I think these tools are very important for allowing actually bigger investors to get in. We don't have a lot of huge investors in the Pulsechain Hex community currently. We have some decent sized ones, but they're almost like celebrities when they buy. We all know their wallets.
Right.
So those guys will have more options now in the future, and we think that's a very good thing for the community because ultimately you need to get those big money guys in to really push things up, as you said.
Exactly. Just that's honestly bringing in new buyers as a whole. I just talked with a company that was kind of trying to do the exact same stuff, like creating more on-ramps for big money to ultimately come into the market, because that's really what's going to cause many of these to drive up in price. I mean, specifically ones that are at higher liquidity, higher market cap, it's going to be, they need to be able to onboard these new users. And so that definitely makes a lot of sense.
Yeah, I mean, and using these, the back ends of things like Phamous, will make it easier for them to swap without affecting the spot price as well, right? And then, if, for instance, you're trying to buy a bunch of hex, right, and you're able to open up a long to kind of protect against slippage, you're more than able to do that with something like Phamous. And then same thing with if you're selling a bunch of hex and you want to protect against the slippage to the downside. You're able to open up a short very easily. I forgot to mention another cool thing with this stuff is the liquidity providing in general. Because when you do insert your liquidity into this stuff or provide liquidity on Phamous, it's kind of like a diversified index. Because if you deposit, say, just a stable coin into the liquidity pool, you're still getting exposure to all of the assets within the liquidity pool. So you could deposit a stable coin. You can come out the other side when when you see the time is right. You can come out in Hex. You can come out in PulseX, or Maximus, whatever have you. Right? It depends on what you want to do at the time. But as the liquidity pool grows, you're more than able to cash out any sort of one of these different tokens, right? And vice versa. The same goes with the other way around. If you're depositing Hex exclusively and then you pull out liquidity in USDC, you're more than able to do that, right? Which is pretty great in my opinion. It's a well-diversified portfolio for all of these currencies, right?
For sure.
So that's extremely interesting for me. And also all of the liquidations, they're exclusively given to the PHLP providers, which is, you could probably argue, is a nice bit of the fees, right? Because GMX, it is on two chains. It's not on any L1s at the moment, but they have generated, I believe, between the two chains, about $120 million of fees over the past year. And they've only been around for maybe a year and a couple of months at the moment. And, their platform is doing very well right now and is very well respected. It's kind of like the sweetheart of DeFi at the moment.
Right.
I believe their token has performed over the past year. It's maybe up 80% or something like this during the bear market, which is very impressive, to say the least.
Exactly. Definitely shows that there's plenty of support and a strong foundation behind it. That's why I'm definitely interested in what you guys are doing here. And like I say, guys, if you want, or you guys want to sacrifice and you are interested in this, there will be links in the description, because I've personally made quite a bit of money off of GMX. I've only been into it for the last couple months, but already being able to see the benefits of getting into it, seeing how well it performs, any sort of sell-off in the market, buyers come in and step in, because ultimately they're going to be able to earn more off of the fees that are generated inside of the platform itself. And so something like this, especially launching at the very beginning with all of these other Richard Hart projects that are going to be at the same time, there's going to be tons of money flowing around, a lot of hype generated. And so being able to capitalize at the early part of all of that is really going to be very profitable in a lot of different ways. Obviously there's risk involved, but there's risk involved with anything that has to do with that.
Yeah. So, we think that this stuff will, do okay. We're pretty bullish and excited about this stuff coming out and being able to use it ourselves. just think about the way you can hedge your risks in these with these sort of platforms, right? So I think I stated this earlier with Fiat, but imagine you have a bunch of stakes, right? And you think the market is topped. How on earth would you be able to kind of hedge yourself without having these sort of protocols? It's really hard to do that because the only option you have is to sell on spot, right? Whereas with this, you're able to use a smaller portion of your stack and open up a higher leverage position as like an insurance policy against the price falling down. And you're still happy if price continues to rise, right? Because you have all those stakes, you're collecting the passive APY with Hex, and you got all your T-shares and everything like this, right? But if there is some downside action, opening up these shorts and these insurance policies, they really help with your downside risk management, right? And then, like I said earlier, the inverse is true if you're sitting on a pile of cash and you think that we're near the bottom, but you're not. You're wanting to get that extra little, that little dip, right? I've been seeing some greedy people in some of these chats. They're wanting Hex under a penny, right? Okay, well, let's say that day never comes, right? And you think that we're close to the bottom, but you're hoping to get that under a penny price action, and you open up the long to kind of protect against the price running away from you because you're being greedy. Let's be honest, right? That kind of helps for as the price appreciates and starts to run away. You're still able to get a decent entry into the market, even though the price did run away from you, right? So opening up these longs at the bottom, essentially. Yeah, and at the same time, if you're a staker of the Fame token, right, you got all these people hedging their positions or opening these leverage trades. Hey, you're collecting these passive fees, which is great, right? Excellent.
I've heard a different number thrown out there, so it's hard to say exactly what it is, but they say out of like the 100% of investors inside of a market, specifically traders, only 10% of them are actually going to be profitable, and you're looking at at least 80 to 90% of those people really just losing, because most people have no idea how to trade profitably. It's all just through their own emotion, so greed and fear. They're going to be selling whenever the market's crashing. They're going to be buying whenever it's going up, and by you actually being able to participate in earning off of those fees, that's exactly why it's so profitable for anybody that doesn't necessarily want to try and trade the stuff, is a little bit worried about their own profitability, being able to do that. You can then earn off of everybody else that's going to be making those mistakes. The more people that make the mistakes, the more you yourself are going to be able to earn, and vice versa. I mean, if the market goes up and you have a bunch of people trading the market, the more traders, you're just going to be able to earn more off of those fees. And so it's really a good solid way to kind of protect yourself from, if you don't want to actually have to trade all of that stuff, but then you can still just kind of park your assets and be able to earn interest off of that.
And that's a great point. Most of these centralized exchanges, they create whales in the currencies that they support, right? And by having this, the ability to have the Fame token and stake, your Fame to get a share of the revenue, the community is getting the fees back, and the community is growing their position in all these currencies. It's not some unknown centralized entity getting all of these things and becoming, this whale where they can manipulate the market and, dump on everybody's heads or anything like that, right? It's community owned.
Yeah, and I'll make another point there, which I really like about GMX and this as well, is that this is a fair game. You can take any side of the bet that you wish. Yeah. You can be a staker of Fame. You can be a PHLP provider, bet against the traders effectively. You can be long. You can be short the currencies that you want. The point is the choice is yours, right? So many of these things are rigged in a sense on centralized exchanges where they've always got an advantage. They're the house, they always win, right? With this protocol, it's really up to you. And as you go through the cycle, you probably should be changing your positions periodically. At certain points in time, you probably want to bet against the traders. At other times, you might want to become the trader. And that's one thing that I really appreciate about this being a decentralized DeFi protocol versus your alternatives on centralized exchanges. I don't want to create more Sam Bankman-Frieds. These guys are not reliable people that we can trust. And when they end up too big, like we're basically held hostage by guys like Sam or CZ every cycle. And this is something that Richard understood very well when he created Hex. He wanted to crowd out these centralized exchanges, and I never really properly appreciated it until what happened with Three Arrows Capital, and then BlockFi, Celsius, all these things, and then SBF with FTX. It's a really cool thing that he's done, and it's one thing that DeFi can definitely mitigate. We're still going to have CEXs. We still sort of need them, but if we can deprive them of resources, I think that's a better outcome for everybody. And also it's like why should they get rich? Why don't you guys get rich?
Exactly.
I think that's better.
Gemini Earn just barely shut down their program, which it was already shut down for a while, but I think that they've completely closed it off at this point after that over $1 billion hole that they suffered from. Many, they don't really even know what the heck happened to their money, and that's the issue, is the fact that we're trusting these one or two people or maybe a group of people to lend out your funds, and then they're lending it out to another guy that you don't know where the money's going, and then all of a sudden the liquidity dries up, companies collapse, and then they're over leveraged, and you've just lost everything in the process because it's not even your money. Even it was Celsius, the courts basically ruled that none of the assets that you put on their exchange was your money either, and so that you always hear the popular saying, no, not your keys, not your crypto, and that was the bank or the courts actually siding with that exact thing. And so you're better off playing inside of the decentralized markets than you are trying to trust these centralized exchanges. For me personally, I didn't lose out on anything when all of these different lenders were going bankrupt, when FTX went bankrupt, and it's because throughout the entirety, although I was skeptical on even decentralized protocols and being able to earn yield off of those, because I just didn't know who was going to have good code, who had faulty code, what was going to get hacked and stolen, I told everybody to stay away from the centralized yield, because either way, you just can't trust what these people are doing. And I had no idea that it was going to turn into the mess that it did over the last few months. But I think that now more than ever before, everybody should really be paying attention why you can't trust these sort of people. And we just have no idea at the end of the day how they're moving funds, how they're commingling funds, what they're doing with your money. And then something happens, you then lose all of that, and then the courts might side against you in that sort of lawsuit or whatever ends up happening. And so you're really just, there's more risk by doing that. Everybody thinks that there's less risk by being able to trust this centralized entity that's, has these regulation requirements and whatnot. But really, we don't have true regulation and a strong understanding of what that even means in the market. And so you're better off being able to use the decentralized protocols and being able to trust, the people that are building it more than you can trust these centralized entities that, we have no idea of what's even going on. You can at least kind of look at the code. You can trust other people that understand those sort of things and get an idea. Whereas with a centralized exchange, your money's just kind of in a black hole that you don't know what's happening with.
Well, yeah, I can tell you really get it. And, Aave was directly involved in the thing that blew up everybody, right? The thing that blew up everybody was a basis trade that was happening with Grayscale. Where big money guys like Three Arrows Capital and plenty of other big hedge funds were doing this basis trade to get around 20% yield off of Bitcoin, and so they were getting their leverage from BlockFi, they were getting their leverage from Celsius, and a basis trade is supposed to be risk free, assuming you can trust those entities that are providing you the borrowing, basically. But when someone blows up and owes a bunch of money, that basically means that those other guys are now insolvent, right? Mm-hmm. These guys were all using Aave as well, right? But the difference is Aave's totally transparent and you can see it, and it liquidates you if you don't keep the right collateral, right? Mm-hmm. So you actually saw some of these guys paying back their loans on Aave because they can go have a legal battle instead with the Celsius guy, right? You can't sue Aave, right? Aave just liquidates you, right? So this stuff that's happened in this cycle is nothing to do with crypto, really. It's the same sins that we always see in what we call shadow banking in finance. This happens periodically, pretty much every cycle. You'll see some version of this happen. We saw a version of this happen in 2008, where you had people doing off-balance sheet transactions, SPVs, these sorts of things. You see it happen in the EM as well, pretty regularly. So in a way, this is where I think DeFi and crypto actually really shine. Fiat, Aave basically serve the same function as Celsius, BlockFi, but in a DeFi way, right? And they're still functioning just fine, no issues, right? And GMX serves the same function as FTX, right? And in fact, it's you're doing the same trades basically. But FTX, you can't really trust it because you don't really know what their position is. It isn't really transparent. You're going on, the credibility of somebody being a billionaire who's friends with Tom Brady. Rather than being able to actually see his real position, financially speaking. Whereas with GMX, there's literally an army of people looking at it every day, criticizing it, looking at it. And the fact that these two protocols have survived this stress test with markets over the last year is incredibly valuable to them, right? I've been in GMX since probably February. And we started working on our fork probably in June or July. But one of the reasons we didn't go public with it until December was because the code was still pretty new and we wanted to see how it fared.
Right.
And the fact that it got through some pretty horrific months without any issues, really, and Aave similarly, just shows you that these things are really useful and likely to stick around for a long time. They serve essential functions. So once you've carved out your niche, and everybody knows your stuff works, you don't even really need to change it that much, right? As a matter of fact, you probably shouldn't, right? Sure. Because that just adds new risk, right? So that's a pretty important thing. And what I love about GMX is really its tokenomics, and what I dislike about Aave is its tokenomics. So I think we fixed that with Aave. And we've basically copied it with GMX. So, I think if Pulsechain has a modicum of success, it's pretty unlikely that those guys are going to bother to come over to Pulsechain anytime soon. But I hope they do someday. We would welcome the competition because that would mean that we've already done very, very well. But we're going to have the first mover advantage in these spaces. These are pretty complex protocols to run. There are sort of obvious ones. There were 3 or 4 teams trying to build an Aave fork for Pulsechain. We were the only ones that were able to do that, and the other guys gave up and decided to do something else. So, I think we're likely to have the first mover advantage and basically almost a monopoly in this space for quite some time.
Right. That's awesome. Yeah, it's well said. I can definitely see your points as far as all that goes. I mean, with more of these people that have got blown up inside the bear market and at the very least seeing all of this stuff kind of happen, it's definitely bringing people that at least weren't considering decentralized protocols or kind of stuck to Coinbases and Binances and whatnot. They're definitely going to be looking at these sort of things. And for me, I see a lot of value happening inside of Pulsechain when that releases, not just Pulsechain, but PulseX, and even specifically what you guys are building here, because like you guys stated, it's the first mover's advantage, being able to come out with the protocol that works, that people want to use, that they can actually trust. That's the one that they're going to ultimately use. And so these are very, very valuable inside of a new ecosystem. We've seen it happening with GMX on Ethereum. Well, specifically sidechain. But what we're seeing inside of these markets is people that are looking for these new opportunities. And for me, I believe that Pulsechain is going to be a huge opportunity. There's going to be a ton of money to be made, and being early to this economy is, ultimately why I wanted to even record this video in the first place. Is, if this is something that's valuable, if this is something that people can trust and people are going to be able to earn a profit off of in a more safer way and an alternative to centralized exchanges, then more power to them. Do your own research. But I really like what you guys are working on here. I'm definitely interested in sacrificing for Phamous. I think that's going to be something really big, mainly because I've already personally made good profit off of GMX, and I've used GMX, and I believe that it's going to continue to see a lot of adoption. And so, like you guys stated, first mover's advantage. If you are interested in Pulsechain, these are going to be the projects that you need to take a look at, because these are going to be the ones that ultimately do see adoption quickly, and being able to earn off of that right at the very beginning, at the ground floor, that's where the majority of that profit is actually made. And so I can definitely see that, and I think that this is definitely something people should be looking into. At the very least, I'm interested in it, and I can't say what other people think, but I think that this is something really cool that you guys are working on and building.
Yeah, man, we appreciate it. We feel the same way.
Thank you.
Well, do you guys have anything else that you guys want to say? Anything we haven't covered? We're about 55 minutes in, so it's been a very insightful conversation, to say the least.
Yeah, sure. I think this has gone very well. If you're interested, we do have a passion project that we're also doing that has no token, that's not any sort of fundraising. It's just, literally built. It's a portfolio tracker for the Pulsechain RH ecosystem, essentially. So, we could talk about that a little bit if you wanted to.
For sure.
Passion project that we've made for the ecosystem. It is essentially a place where you can find all of your favorite assets on and across all of these variety of different chains, including Pulsechain when it does come out. This is the best way to track what you've got going on testnet at the moment. But essentially, you'll be able to see a range of different currencies that are across multiple wallets, right? So you'll be able to attach and have, like, say, you have 10 wallets or something, you can add them all into a bundle, and then you can track them all on this application. You can see all of your hex stakes. You can see when they're ending, the interest that they've accrued, their value, and the T shares, right? And then you can see your rank in the pools versus, or I'm sorry, the sea creature that you are, right? It'll show you liquidity positions. It'll have support for Hedron, and it'll show you your HSIs. Eventually, it'll have the ICOSA stakes and your Hedron staking.
It also importantly shows you what you're doing with Phiat and Phamous, although this wallet that he's picked doesn't seem to have positions currently. But that's part of our strategy here, is to basically let everybody see their total position. We manage portfolios for a living, so this is very important stuff for us. We want to know exactly what risk we have in a day-to-day. So that's why we built this. There are similar things out there, but they tend to not support Hex, which means they're probably not going to support our stuff for a while. So we thought we would just fix that and build this. So this is just something we've been doing for fun. It's I think it's already pretty cool. We want to be able to manage risk, and it's also sort of how we cross sell our products as well, because it allows you to sort of like it gives you the option to basically trade or deposit and earn yield on certain assets. So it'll take you over to Phiat directly. Dylan's brought up a better wallet now. So you see the earn button on the top right there. That's almost giving you the suggestion that you could actually be earning yield on those tokens. So if you hit that, it'll end up taking you to Phiat.io. You can see Dylan's already got a decent bag that he's earning on Phiat currently. So it looks like he's a 1.22% Phiat whale. So he's got quite a bit of the token, and so he's earning yield on that every day through staking, and you can see some of his positions as well. So this is I don't think anybody else in the community has bothered to make anything close to this. and we're going to just keep supporting not just our stuff, but other people's things as well. There's some famous positions for you as well. So what I'm trying to do here is basically, horizontally integrate the best stuff in finance, DeFi stuff, right? So in my opinion, we basically got, three of the most useful things. And yeah, I think that bodes well for our chances of sort of being the go-to place for savvy investment people who are using Pulsechain. But not just Pulsechain. We will ultimately expand, into different areas as well in the future.
For sure. Yeah, this is definitely a valuable metric to be able to have. I mean, the fact that it just kind of groups everything all into one place that you can look at is definitely valuable. I could see why everybody would honestly want to use that. And so if you guys are interested in this as well, is this already pretty much like released and people can use this at this point?
This is in the alpha version, or it's preliminary. It's evolving as time goes on, but it is publicly available for you to use and stuff like that. But
Phatty.io, go try it for yourself right now, guys.
Yeah, I'll definitely link everything in the description that we've talked about so far, so you guys know exactly where to go. But obviously, it's right here on screen.
Yep, and just a little thing we can look at here, just to tickle our fancy. We have been tracking like a bunch of different associated Godwell
I was going to ask about this. I'm glad you brought it up.
It's showing the hex stakes, and this is the main thing I wanted to show you guys. But the Godwell is a Poseidon, and he has a pretty nice ladder. It's actually very well done, to be honest. And he does have a gigantic stake coming out in 2 days. So, we'll all bask in the glory of that ending stake coming up. So
I've been hearing about everybody talking about this. Actually, I didn't know what it meant though.
Yeah, it's nothing to worry about, but he's just going to kick the can. But
probably yes.
Eyeballing other people's stakes is a big pastime of the Hex community. Mm-hmm. People are constantly fixated on this, so that's another big use case, is spying on people and seeing what they're doing. We've put our wallets there as well, so that people can see what we're doing and whatnot. We've put the other SAC addresses as well, so you can sort of see what they've done with the SAC money, if it's still there or if it's been sent to Tornado Cash. So we think transparency in this regard is actually a pretty good thing and an important thing, because you want to know kind of where your positions are and where the teams are. This is Phatty.io, it's not as good as it could be. It definitely needs to get a little bit better, but I think it's already a pretty useful little tool. And once Pulsechain's live, it'll be very useful, because you'll actually be able to really see all these things and monitor them properly. And I don't think the other guys that do similar type of products are going to probably bother to support, LP positions, let's say, on PulseX for a while, or if they even support Pulsechain at all. It'll probably take them a while.
For sure. Yeah, no, definitely. I could definitely see why this is going to be valuable. So I'm 100% going to check this out. I don't really have a ton of stuff going on inside of Richard Hart's ecosystem. I learned about Hex early on, but I was broke. I was like living in my grandma's basement at the time, so I didn't even have any money to sacrifice or anything back then. And so I ended up missing out on that, but that's why I ultimately sacrificed for Pulsechain. It's because I did see the value and that was going to provide. And so I don't have much else in anything up to this point besides that. But learning more about the ecosystem, that's why I wanted to bring you guys on, was so that you could ultimately explain some of the new stuff that's going to be developing, because without a doubt, I really do believe that this is going to take off in a big way. And with what you guys are working on, I also have a lot of confidence that says, you know, these two projects are going to be doing well as well. Just based off of, if you look over at the forks of what they originally came from, you know, they're very valuable inside of the space. So many people use them. GMX is really starting to take off in a huge way, getting tons of adoption. And so if the same sort of things, you know, ultimately happen on this other chain, I think that there's a very likelihood scenario that says, you know, these are going to benefit very well, and the people early on are going to be able to benefit off of that throughout the entire cycle as this goes, because you guys are launching all of this stuff at pretty much perfect timing. You know, looks like the bear market's getting really close to being over, if it's not already over. We've already seen all of the big money kind of blow themselves up, and so now we're kind of waiting for the new money to come back in and build a foundation. And so now is the best time ever to look into this type of stuff if you're looking to invest into things, because, you know, if you've got another 3-year bull run to ride out, and getting in right now at the very ground floor while this stuff is still just being tested, while they're still actually sacrificing for Phamous, you know, that's where the big money's going to be made. And so obviously do your own research, but I feel like through this video a lot was said, a lot was covered, and, you know, ultimately I see the value in this, and so I'm 100% interested as far as my own personal opinion goes.
Lovely.
Yeah,
Thank you.
Appreciate the kind words, sir.
Yes, sir. Well, I think that's about everything we need to cover up to this point. I really appreciate you guys' time. Thank you so much for explaining everything. You know, I really do think that what you guys are working on is pretty cool stuff. And so I'm going to be looking forward to following along with the journey and seeing how all of this kind of transpires for the next couple years or so.
Roger that. Before we go, everybody join the Telegrams. I think D.I.Y. he'll post the links in the description, but you know, t.me/Phamous X with a PH. Join the Telegram, ask the questions, you know, get involved. Post your P&L on Twitter and Telegram, right? You're totally able to do that stuff. You can share your P&L cards, right? Brag, okay, you know. Do your things. Follow us on Twitter. Ask Buck really dumb questions. He really loves that at t.me/Buck_Phiat. And yeah, I think that's all we got for us, man. Thanks for having us.
Thank you, sir.
You guys take care.